YouTube, what's going on? Appreciate y'all for watching my videos. What's going on? What's going on, YouTube? What's going on? It's one person in here. Simple logic. What's going on? Let me wait for a couple more people to come in. What's going on, YouTube? What's going on? Damn, everybody coming in. Bear with me, y'all. I'm getting loaded. You paid your SFI truck off? Man, that's good, man. Anyway, let me take this mask off. Let me take that off. Y'all gotta bear with me, y'all. I'm getting loaded up here. So in this video, I'm gonna talk about some stocks. Talk about some stocks. You know, in this video, I'm talking about some stocks. Any of y'all looking for a good buy? Keep a watch out for Tyson Foods. Tyson Foods should be a good buy coming up here. Tyson Foods, some of their plants may be getting shut down because of Corona. Some of the employees got Corona. So Tyson Foods might be taking a hit. So keep a watch out for them. Right now, Tyson Foods at $60 a share right now. So, I mean, it's still a good buy. You can buy it. It's still a good buy, but right. So now that all y'all got these paid for trucks, you need to be putting that money back. Putting that money back for retirement. You know, now that y'all run around and pay for trucks. I know y'all not gonna do that, but that's what you should do. That's what you should do. Yeah, TSN, Tyson Foods. Take a look at them. I mean, I think that's still a good buy. Tyson Foods is a strong company. And so here's on my notebook. I got a list of a bunch of stocks I want to share with y'all that I think are good buys. So let's talk about them while I'm sitting here getting loaded. RCL is a good buy. RCL, that's Royal Caribbean Cruises. Their price right now is $52 a share. I think you should buy them. It's a good buy. Let me look at their spreadsheet. Okay. Okay. For first quarter, they reported $2 billion in revenues for first quarter. Royal Caribbean last year about this time, they was up 20% at $2.8 billion in revenue. They made $573 million and operating income. So cash on hand. Okay. I'm trying to see how much debt they got. See how much debt they got. I want to see what their second quarter earnings haven't come out yet. So, but I still think they're a good buy. Last year about this time, Royal Caribbean was running about $130, $140 a share last year about this time. So I think they're a good buy. Let's see, LCN. I forgot what LCN is. No, not LCN, LNC. I'm sorry. My bad, y'all. LNC. Lincoln National Corporation. I picked these guys because I don't know if they're debt free. It's a reason why I picked these guys. Yeah. The reason why I picked these guys is because they're going for $40 a share, $38 a share right now. And let's see, last year about this time, they was running at $70 a share last year about this time. This company has seen like uptrends. This company's been seeing uptrends over the last 30 years. It looks like since 1990 all the way maybe 2017, they've been on an uptrend since then. 2010, they had, they went down, then they came back up, then they went down, then they came back up. So I think they're a good buy. Let's see. Their dividend yield is 4%. It's a damn good dividend, if you ask me. It's a good buy. I forgot what this company does. Let's see. I forgot what industry this company is in. Hold on. Let's see what y'all talking about. As the largest solar farm on the East Coast, I recently delivered solar panels to them in Locust Grove, Virginia. Shape World 15. What's going on? Simple Logic. All right, I forgot what industry this company is in. Hold on. I think they're in finance or insurance or something. Okay, Lincoln National Corporation. They're an insurance company. Okay. So they in insurance. Not bad. Not bad. Okay, my next pick for a good Corona stock is CONE. These guys, let's see, CONE. These guys, they are in the real estate business, the tech real estate business. These guys invest in data centers, data warehouses. The last time I checked, CONE, Cyrus One Inc. That's the name of the company, Cyrus One Inc. These guys have been on an uptrend since it looks like since what, 2015 or something like that, 2016. They've been on an uptrend, and I think they're a good buy if you can get them at the right price. If you can get them at the right price, I think they're a good buy. Okay. NAT, did you buy VIAC stocks? I don't know who that is. Do I have them on my list? VIAC. VIAC. I might have them on my list. Yeah, I got them on my list. VIAC. I got them on my list. But these that I'm running through right now, these are my top picks for Corona stocks. Let me see. SWK. Stanley Black & Decker. Yeah, Black & Decker. They've been on an uptrend for a good while. Black & Decker, they own a lot of tools and stuff. They own Ryobi. They own it's a lot of tools that they own. I think they own Rigid with Home Depot. They own it's a handful of them. It's a handful of brands that Black & Decker own. But yeah, they're on sale right now. You got to watch them because they're $136 a share right now. And with the Corona, they went down to 70, about $75 a share. They went down. That's a good buy. VTR. Let me see. VTR. It's a couple of these companies that I picked. I think they're good picks because some of these companies are debt free. And there's a couple of these that I think is good buys. This company, Ventus Inc. VTR. Yeah, VTR. Ventus Inc. I forgot what this company is into. Oh yeah, Ventus. Yeah, Ventus is a good buy. They're a REIT. They're a healthcare REIT. VTR is a healthcare REIT. I would buy them. They got a good dividend. They do hospitals, medical centers. Healthcare ain't going nowhere. It ain't going nowhere. I think they're a good buy. AIG. AIG, I think, is insurance. Let me see. AIG. All right. American International Group. I think these guys are insurance. Yeah, it looks like before the Corona, these guys were hovering around $50 a share. $55 a share before Corona. Solid. They ain't really have no ups or downs until Corona. I would buy these guys. Right now, they're going for $32 a share. Okay, so I think they're gonna come back at $50, $60 a share. So I think it's a good buy. Let's see. My other top pick is COP. COP. Hold on, y'all. I gotta get my paperwork. Oh, I thought the guy was about to give me my paperwork. ConocoPhillips. ConocoPhillips. ConocoPhillips looks good. They've been holding strong about 45 $65 a share.
Shipping department is on the other side.
On the other side of the building? Okay.
Hang driveway, hang a left, stop sign, hang another left. As soon as you get past the chain link fence, turn in that parking lot.
Oh, okay.
And back up so you knock the chalk out.
Okay. I gotta go somewhere else to get the paperwork. Hold on, y'all. My bad, y'all. I know this noise is aggravating y'all. Hold on. All right, I'm back. All business, nothing personal. What is your point of view on buying gold and silver? Um, Me personally, I don't buy gold and silver. Um, I don't buy gold or silver because I don't have nothing to protect. You gotta understand what's the purpose of buying minerals and stuff like that. So the whole point of buying minerals and stuff like that is you gotta understand how precious metals play a role in the market. Precious metals is not an investment. Let me just say that. I know I'm gonna get some gold junkies in here. What? I got all my money in gold. Stop. You know what you're talking about. When you buying precious metals, the whole point of buying precious metal is to preserve wealth. Buying precious metals is kind of like an insurance policy or a life insurance policy. So, like, for example, You buy insurance like a life insurance policy in case somebody dies, and you don't have to use your wealth to pay for their death. You get the insurance policy to hedge against when somebody dies. So it's kind of like having an emergency fund. Like Dave Ramsey talks about having 3 to 6 months of savings saved, because the whole point of that is to hedge against, your wealth. So you got real estate, you got mutual funds and stuff like that. And so having 3 to 6 months of savings keep you from having to dip into your wealth that you're trying to build. So that's what gold and silver does. If you are a wealthy person and you're worth millions of dollars, to hedge against the stock market, you got to understand there's a balance of, how should I say, there's a balancing act between paper investments and precious metals, real estate, bonds, and stuff like that. And so if you look at the stock market, you're going to see right now oil, precious metals, real estate on a growth scale, on a scale of like appreciation, it's not as good, because precious metals, they hedge against growth. And so if you understand that, that's what you use precious metals for. So if you are a wealthy person, it's kind of like buying an insurance policy. So if paper currency, if dollars and stocks, a stock is a certificate, like a dollar bill. You get a dollar bill, it's like a stock. And so that paper you get gold to hedge against the paper. So if paper stuff go down, like stocks, dollar bills, treasury notes, gold will go up. And so if gold goes down, that means you hedge against inflation. So when you have hyperinflation and stuff like that, the price of gold will go up. And so that's the whole point. So I doubt it anybody who watched my videos has any business buying gold, because you don't have any wealth to preserve, to protect. You hedge against it. It's a hedge. So that's how I see precious metals: silver, gold, aluminum, whatever. Well, yeah, Acorn Stash. I don't know nothing about that. I gotta finish this video talking about these stocks. Anyway, so all business, nothing per se, to barter with when dollar decreases in value. Yeah, but you gotta understand, it's illegal for people to own gold. Okay, you gotta understand that. You can't go to the grocery store with a bar of gold. You can't pay for groceries. You can't buy gas with a bar of gold. You got to understand what gold, having mineral assets mean. Okay. So it's kind of like Bitcoin. You get gold and you go to a broker, right? And you have the rights to the gold with the broker. And, you could, if you were wealthy enough, you could get a safe and dig a hole in the ground and put your gold in there. But the average person has no business messing around with gold. And so when you're talking about bartering, I mean, really, bartering, that doesn't apply, because say the shit hits the fan, right? Say the shit hits the fan in the economy. Well, if the dollar deteriorates, you're not going to pull out your bar of gold. You're going to trade for like other things. You're going to trade for cigarettes. You're going to trade for water. You're going to trade water for some pills or something. If the dollar if the dollar disappears, right? If we talk about bartering, you would barter for something of value, bullets. In economics, you got this philosophy called guns and butter, guns and butter, um, the guns and butter analogy. So it's the same concept. So when we talk about bartering something, well, gold won't be worth nothing. You know, gold is just worth whatever the economy deem it to be worth. You know, so but for the sake of this video, people who watching this video have no business buying gold. The best thing you can do is buy real estate or buy stocks or something like that. Don't worry about no gold. Don't worry about gold, man. You waste your time. Unless you got like 5 million, 10 million, 20 million in cash and you trying to preserve that wealth. Okay, well, you would buy some gold and hedge against the dollar because you have enough wealth where when the economy shifts or whatever, you feel it. So whenever the dollar or stocks or what have you goes down, you got gold to back it up. The gold shifts back and forth in value. You know, you got bonds and gold, it goes back and forth. And so then the Fed adjusts the interest rates and all that other bull. So it's the same concept. But anyway, let me talk about these stocks. So COP, ConocoPhillips, I think that's a good buy. If you look at it, it's on sale. I think it's on sale. It's about $40 a share right now. Before the corona hit, they was at $65, $70 a share. I think it's a good buy. Let me see. HAS. Okay, let me look up HAS. HAS. Hasbro Inc. I don't know what these people do. Okay, so if you look at Hasbro Inc., they was going for about 95 to about $100 a share before the corona hit. Now they're like at $65, $70 a share right now. I think they're a good buy. They do about $1 billion in revenue. They do about $1 billion in revenue. I'm trying to figure out. Hold on. Hasbro Inc. Oh, okay. They make multimedia products, games, board games, and stuff like that. Okay, Monopoly. Okay, Hasbro. What is this? I can't read my own handwriting. My bad, y'all. SVX. Hold on, let me look these guys up. SVX. XVX. Hold on. See what y'all talking about. I forgot why I wrote these guys down. Shit. My bad, y'all. I forgot why I wrote these guys down. These guys, no, my bad. It's Chevron. My bad. CVX. I can't read my own handwriting. Yeah, CVX. Chevron, they going for about $90 a share. They was at about $120 a share, 115. I think they're a good buy right now. When the corona hit, they went down to about it looks like about 70, 60, 65, $70 a share, look like. So Chevron, they're a good buy. Chevron. Let me see what else. Chevron. Okay. BHP. BHP. I should have wrote the company name down. Let's see, $50 a share. Yeah, they went, when the corona hit, they went down about $35 a share. They're at about $50 a share. Yeah, BHP, I don't think they're a good buy right now. I put them in my watch list. I will put them in my watch list. KHC. All right, KHC. KHC. Let's see. Yeah, KHC. It looks like Kraft Heinz Co. They're a food company. It looks like they've been on a downturn for a long time. I don't know if they're a good buy or not. I would put them in my watch list. Kraft Heinz Co. Yeah, it looks like they've been on a downturn for a while. I don't think Corona have nothing to do with these guys. I would put them in my watch list though. COF. Okay, COF. Oh, Capital One? Yeah, Capital One. Let me see. Before Corona, Capital One was about $100 a share. They're $70 right now. I don't want to say they are steal. They down. You can make some money there. They got a good dividend yield, 2.31%. So, this is just my opinion. Just for my research and stuff. This is just my opinion. I don't suggest y'all going dumping all y'all money into these stocks, but you look at these stocks for yourself and make up your own damn mind. And I think they're decent buys. Not all of them, but they're decent buys. Capital One, $69 a share right now. And they was hovering strong for the last 5 years at around $100 a share. Didn't have many fluctuations. Seemed pretty strong over the last 5 years. So, except when the Corona hit, they Corona affected just about everything. So, all right, COF. Another good buy is WFC. Let me look at WFC. WFC. Is that Wells Fargo? Yeah, WFC is Wells Fargo. Yeah, Wells Fargo is way down, man. They way down. Wells Fargo is $27 a share right now. They usually go for about $50 a share. Wells Fargo been holding strong for the last 5 years at $50 a share. They ain't moved at all. Like Wells Fargo, over the last 5 years, they've been hovering about $50 to $55 a share. So that tells me that's their sweet spot. And so $27 a share, I would buy them. And I got some more. Chipotle. I would buy Chipotle if I had the money. Chipotle is $1,000 a share. To get one share, you got to spend $1,000. The reason why I picked Chipotle is because they're debt free. They're debt free. I would buy them. I found a whole bunch of. Let me see if I got my list in here of debt free companies. Caterpillar was debt free for a little while. Let's see. Caterpillar was debt free for a while. They're not debt free no more. For some reason. They probably invested in a new line of product and they had to take out some debt. Let's see. PRU is a good buy. Prudential Insurance. Here's another one on my list. IBM is a good buy. They got a good dividend. IBM dividend is 4.94%. That's pretty good. Because IBM stock shares at last time I checked, they like $200 a share or something like that, with a 4% dividend. That IBM is a strong company. IBM, they shifted their business model to data centers. So the Netflixes, all that online commerce stuff, that's the backbone. The infrastructure of the internet is due to IBM. They're a strong stock. I would buy them. Let's see. It's a bunch of them. United Healthcare is a good one. United Healthcare. Coca-Cola. Everybody know Coca-Cola. AT&T. A lot of these stocks already came back to their normal. So, I mean, did. So, but anyway, I just did a random search on my brokerage account and I found some stocks that's good to invest in. And so, basically, if you want to find a good stock to buy in, basically you go on your brokerage account and you do a sort. You set your sort criteria for you set your sort criteria for I just had a brain fart. You just set your sort criteria for PE ratio. You want to see the PE ratio, and you want to sort for companies that's had a stock price change over the last 6 months. And so you look for a price change for the last 6 months of more than 50%. And you do then you do a sort for debt to equity. Debt to equity would be how much debt they have. Debt to equity. I usually try to find companies where their debt to equity is like less than 2% or something like that. 1%, 2%. That's gonna give you a bunch of strong companies that's financially strong. PE ratio, basically you set your sort criteria in the financial strength. You go to financial strength and you click those boxes right there where you want to, and you do a sort from lowest to highest, and it's going to give you the strongest companies financially by the numbers. Not all companies are strong by the numbers because, some of the stock price may inflate the company more than, so you would have an overvalued company. I'm looking for undervalued companies. Companies that's got a strong company that's undervalued. And so you go to financial strength, and I need my computer in front of me. Uh, but yeah, that's, and that's what I came up with. How do you feel about Acorn and Stash? Acorn, I don't know nothing about them guys. Acorn, Stash. Oh, Stash, Acorn. Yeah, those I wouldn't I mean, I still hold strong to my regular brokerage account. Stash and Acorn, those are companies, those are apps that you download and you link your checking account to these companies. And when you buy something and the change that's left over, they invest it. I mean, you could do that if you're lazy, but I'm an active investor. Like I get involved with my investing. So, I don't need no app to help me invest. I go on there and find stocks on my own, and I have, a certain amount of money that I make, and I allocate it to invest. I buy some real estate, buy some stocks and mutual funds. I don't need no app to help me. But if you're a kind of person and you're not knowledgeable about investing, or you're lazy, you don't know how to manage your money, then I guess you can use Stash or Acorn to help you with that. But basically, them apps, they stealing your money, basically. They stealing pennies, tenths of a penny from you. I don't like messing with them companies, me personally. But if you want to do them, you can do them. But that's just my opinion. No true investor need all that help, to invest, and so I'll be turning. What you need, what's going to help you more than anything, that's going to teach you how to invest. You get on a budget. You start at your house at first. Okay. You put yourself on a budget. You put your truck on a budget, and you learn how to read a spreadsheet. You learn the fundamentals of business finances, accounting. Those things are going to help you a lot longer. So you can go on here and look at stock financials. You can look at a company's financials, and you would know what that stuff says. Okay. You would know what operating income is. Operating income is just another word for gross revenue. Not gross revenue, but net income after it's profit. It's just like a small business got a P&L. It's the same thing. So operating income is your net profit after expenses on the corporate level. And so, cash on hand. And so you know how to read this stuff. And so, but that you learn the fundamentals. That's fundamental investing. That's how you would start and learn this game. Read some books on how to read corporate financials, income statements, balance sheets, and stuff like that. That's going to do you better than letting these apps do the work for you. To me, that's just my opinion. But I gotta go get my paperwork, and let me see if it make sure I got everybody. VIA. But yeah, so I gotta get my paperwork. I just want to talk about a couple of stocks real quick, and run a couple stocks by y'all, and and but hey, I appreciate y'all for watching my videos, man. I'll see y'all next time.